Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. Unfortunately, Michael Becker is closing a transaction today, so he could not join us. In the podcast today, we have Steve Shulholm. Steve just recently purchased a property in Dallas, and I thought a little bit different today. We're going to kind of walk through the transaction with Steve, kind of get Steve's interpretation about how he put the deal together, who he used for investors, and kind of talk a little bit about timing and kind of get his perspective. So let's get going and kind of meet Steve. And Steve, how are you?
I'm doing good today.
Good.
Awesome day out.
It's a beautiful day out. So Steve recently purchased the property, and let's kind of go right from the beginning. How many units did you buy?
It's 164 units.
164 units. And when did you close?
We closed in the middle of October of 2015.
And when you closed on the property, what was the name of the property?
The name was Casa Fuquez.
Casa Fuquez. Okay. And so just give me maybe a 2 or 3 minute background on you. What's your background?
Well, my background is I spent a lot of time in semiconductor business, the technology side of things,
Okay.
engineer in that space, did a lot of product development work for suppliers into the semiconductor fabs, spent a lot of time with travel, managed a number of international accounts, spent a lot of time in Asia, a lot of time in Europe. I also worked a little bit with some biometrics industry too. So I'm based out of Portland, and about 3 years ago I moved to Houston.
Okay.
And
So you moved from Portland down to Houston, and then how did you get into real estate? I mean, semiconductors, high technology type of stuff, and all of a sudden now you own a big property in Dallas. What was the driver?
Well, I moved to Houston looking for different business opportunities, and I was actually looking at a number of different things. We looked at a few RV parks as a possibility. There's a large growth in southern Brazoria County that we were looking at possibly doing some RV parks for, but then that transitioned into joining a local investor group in the Houston area.
Okay.
And working on some real estate projects out of that because of the opportunity associated with it.
And did they teach you a little bit about the multifamily business? Is that how you learned a little bit about multifamily?
Yep. Yeah, they're very instrumental. They brought a lot of models to play, identified some criteria when it comes to decision making.
What else did you key upon to educate you in multifamily?
Well,
Or even real estate or anything? Did you read any books or watch any YouTube videos?
read a couple of books. What I think made the biggest sense for me was I just started, and when I really decided to jump in with both feet, I went on LoopNet. And I download properties that were for sale in the Houston area.
Okay.
And I'd walk them. I'd drive by them. And I'd do my own financial analysis and do my own modeling on these properties. My intent was to understand the market, understand the submarkets in that area, and try and get a understanding of the correlation between a number on a spreadsheet to what a property might look like in person.
Okay. So you're in Houston. You're getting taught a little bit about the multifamily business. You're reading books. You're watching videos, I would think, and
Right.
doing your analysis on LoopNet. You drove a number of properties. You did your personal financials on the property, exactly if you owned it, how that property would work. And now, did you look for multifamily properties in Houston, or what brought you up to Dallas?
Well, I really did start in the Houston area. And as you know, Paul, the Houston market for multifamily has been very active the last couple of years.
It has.
And through that process, I met a number of people, a number of brokers in Houston. And through that network, I met guys in the Dallas market too.
Okay.
And just through the networking, talking to people, reaching out to people, I expanded my search into the Dallas area also.
So you looked at not only Houston, did you also look at Austin and San Antonio and some of the secondary or tertiary markets?
Well, I looked about 5 seconds in Austin, but that 5 cap over there just kind of chased me out of that market.
Yeah, it's a very low cap rate. Returns, are not as high. You might as well put your money into San Francisco or New York or things like that. But, that's a little bit too low for most buyers that are small buyers.
Right.
So talk a little bit about, how did you find this property in Dallas?
Well, in talking to brokers, and I really continued to expand my network. I mean, there's people who kind of, as every business has, there's a lot of key players. I met a number of those people. I also expanded beyond that to my own personal network.
Okay.
And talked to a lot of people that I knew. And through those networking activities.
Was this a property that was on the market, off the market?
Totally off market.
No kidding.
We actually tracked it down a little bit before it was scheduled to go up for sale. So we actually got into it before the sale.
All right. So let's go through a little bit of the chase and go through some dates and numbers and times like this. Let's just clarify some things.
Sure.
Okay. What was your understanding? Why were these people selling this property?
Well, this property was bought out of foreclosure probably 4 or 5 years ago. And it was the original target of the owner to own it for a short period of time, 3 or 4 years, and then transition the property from a foreclosure property to something that was a little more stable, and then transition out of it. So that was the intent of the seller, and that's what we intersected that kind of at the end of that cycle.
Mm-hmm. So do you know anything about how much CapEx was put into the property?
Well,
what did they tell you, and what do you think it was?
Well, the claim was over $2 million were put into the property by the prior owner.
Wow.
When we walked the property during our due diligence, we saw evidence of a lot of money had been put into the interiors. The exteriors were in good shape. And so it's possible. I mean, interiors, they can burn your budget pretty quickly. So,
yeah. So did this seller own any other properties, or was this his only asset?
He owns a couple other properties.
Okay. So he has some experience in ownership of these properties. Now, this property is in the South Dallas area. What did you think about, location of the asset in that submarket? Were you no problems? Were there any concerns? What was your initial take?
Well, I'd say it's mixed. The things that I really liked about it were the job growth in that area.
Sure.
The number of distribution centers. Amazon's recently put in a facility down there. There's a number of distribution centers in addition to that in that area. So the job growth is extremely positive in that area for that kind of a individual. And that was a very good part of it. There's a lot of other investment going into that area, shopping and restaurants. The reputation of the area was a little rough.
Yeah.
So we had to take that into consideration too.
Did you guys do some physical due diligence on the property before you made the letter of intent to do it? Did you walk the property just initially? Tell us a little bit about, from the period of time you saw it to the period of time that you actually wrote the LOI. Did you walk the property? How many units did you walk?
We walked 3 or 4 units. They were in the middle of a remodel, or towards the end of the remodel process. We walked the property. They had a lot of parts of the property were shut down, like the laundry room and things like that. So it was really what I would describe as kind of a closed-in type of property when we first walked it.
Okay. And how long did it take you, if you guys made the decision that you wanted to write an LOI, how long did it take you to get a response back from the seller? Was it a week, 2 weeks, 48 hours? I mean, if this person wanted to sell the property, how responsive was he back to you?
It was responsive. It was a very short period of time.
Okay. So in the LOI, you have somebody that wants to sell the property. Did you put up any hard money at the front of the transaction? Did they require you guys to put any hard money into the?
Not at the front part. We had earnest money in the contract, but no hard money as far as the LOI.
Oh, that's good. That's interesting. That probably took some good negotiation, because everybody likes to get some hard money up these days, and how competitive this market is, that they want to see your financial interest aligned with their financial interest. But if you don't have to put the hard money in, that's good. From the period of time that they accepted the offer and the contract was built, did you guys go immediately to getting a physical inspection done with a engineer or a general contractor on the property?
Yeah, we did. Within just 1 or 2 days or 3 days after the contract was signed, we brought in a very strong due diligence team. And with this age property, it's 70 construction, turned out to be a really good idea. And not that we found anything really that was, strange or an anomaly, but it's just when you have a property that old, when you bring in licensed electricians, like licensed AC techs, the typical sewer guys that are going to run cameras in the lines. You get a good idea of a baseline condition. It allows the budgeting for any work that needs to be done. There's a couple of reasons for doing it. Obviously, knowing what you're getting into, but really the other side of that is a risk assessment, and you're minimizing the risk for the investment by doing that. At first, I was like, well, I guess we'll do it. It sounds good. But after going through that process, when you have a 180-page report, pictures, all these things you can follow up on, it was pretty solid.
That's amazing. That inspection group that does that, they look through the entire property, just like Steve was saying, is that do a physical review of every unit on that property.
Right.
They send roofers up to the top, take a look at it and see what the condition is of the roof. They send inspectors, plumbers to push cameras down the sewer lines. Just absolutely unbelievable stuff that you may never do on your house. But this is a large investment, and you just want to make sure that you know what kind of condition the asset is right from the beginning. And so they built this 100 and some page report with all pictures. Did you go back to the seller and kind of said, this is some of the things that we did not know about that we'd like to see if we can get a price reduction? And did that work?
Yes and no. We went back to the seller and he goes, okay, I noted.
So he noted it and said, thank you very much. And did you get a couple dollars off?
Not in this case.
Not in this case. All right. Well, it is what it is. I mean, sometimes you can negotiate with that report and kind of show the problem that if you didn't buy it, this is what the seller was going to be forced to live with. And at least that they would know the problem. You're not going to send them the complete report. You're just going to send them some of the pictures, some of the notes that the engineer has talked about, and kind of figure out how bad this property is.
Yeah, and there's each trade that's on site also gives a budget and a quote for repair of anything they find. So you have there's some pretty precise budgetary numbers to use.
Right, and we use that to build the rehab budget too.
Right.
So how did you choose your management company?
I did some background checks. I was looking for a management company which had experience with this class of property. Has some very specific requirements for a management company. I wanted somebody that knew how to work in this kind of environment, work with a property that has this type of residence in it, and not somebody who is really experienced in any class. So I started talking to other property owners and referred to this property management company because they manage property for people that I know. And we interviewed, walked the property, looked at a number of properties they already ran and had gone through transition processes in to make sure that they were a fit. It's a critical component of this team was a property management process.
And then how many doors is in the property?
164.
Did you ever think at any time that you would want to try to manage your own property? Did that ever come up in your head?
It came up for about 1 nanosecond. That was it.
Yeah, that's you want to have a professional property management company run a property of this size. Maybe if it was a much smaller property in your general area, you would possibly subject yourself to being the property manager. And when that person's sick, if you're sick, you don't have a property manager. So I think, Steve, that was a great idea to make sure you had a property manager. Did they also provide for you a pro forma on how they would run the property?
Yep, we went over a number of that, budgets.
And I tell you, that's great that they were able to do that. Was it a realistic budget, and you feeling that they're following it pretty closely?
Yeah, I had a couple other budgets I was working with from experienced owners.
Sure.
So I was really correlating their budget with other inputs I had.
Yeah.
And so far, we're month 4, we're below the budget.
Okay.
I'm looking mostly at the expense line, but yeah.
Talking about expenses, how many employees were on the property before you bought it, and how many employees are on the property today?
Well, at takeover, we had 7 maintenance guys and
7 maintenance guys for the seller.
Yeah, and 3 office people.
10 people on a 164-unit building.
Right, and a number of those people were living on site.
And not probably paying rent or even getting rent. If they were paying rent, that would be greatly discounted.
Right, exactly.
Wow.
Now we've made a couple changes. We're at 2 in the office, 2 very good individuals in the office, and we're at 2 maintenance guys.
So you're down from 10 to 4.
Right.
So that's a critical, because payroll expenses make up a large expense line item for a property. So bringing it from 10 to 4 and probably creating the same amount of work to be done definitely tries to save you money. Anything more in that due diligence period of time, from the period of time that you guys went under the contract?
I mean, it's kind of known, but when you look at properties, a lot of the information you can get, a little bit of information you get off Google Earth when you look at roofs. Mm-hmm. Our roofs needed some work, so we had 2 or 3 roofing contractors look at it online. Didn't even need to come on site. And that was kind of interesting.
Were the seller's numbers accurate to you, or were they just not so accurate?
Which numbers?
The operating expense numbers. They were not in the ballpark, you'd say.
Yeah, exactly.
All right. At what point did you get your lender involved in the transaction? At the beginning, right after you went under an LOI, at the end? So, by the way, Old Capital did the loan on this transaction.
Right.
But Ricardo Hinonoso with Old Capital was the loan officer in the transaction. At what period of time did you get Ricardo involved in the deal?
Well, we went under contract. Within 3 or 4 days, we were performing due diligence, and we had Ricardo on site during the due diligence for part of that time. Which
is always important. You want to have your lender on site to take a look and see what the challenges are to the physical nature of the property.
Yeah, and get feedback, and give a vision to the Ricardo in this case. And we had a couple lenders also on site during the due diligence. So it was early, very early in the process. People kind of see where we're working with. I mean, in this property, in this location, people always have different ideas, and it's important that we see the actual product we're working with to kind of crystallize ideas and see to get rid of a lot of those assumptions people may have.
Now, you bought this property in a kind of a small syndication. So a lot of your investors were from Dallas and from Houston in this deal, but you were the managing member. You were the captain of the airplane, and you had probably a couple other first officers in this transaction too, and a bunch of limited partners that put their money into the deal too. But you're the captain. Now, was there any challenges on the lending side of this property? Everything's fair, so just kind of talk a little bit about what were the challenges with the group, with the property, location. Obviously, they were able to overcome those, but what were some of the things that you were hearing back from Ricardo or the lenders?
Well, we went through a 2-step, lending process. We started out with one area of the bank and spent probably 3 weeks in there. Originally we had about, I think, 45 days contract to close. Mm-hmm. And we went through one segment of the bank, and we spent 3 weeks of that in that group, and found out that they were going to pass, and we moved to another part of the bank, and that kind of added a little bit of complication because we had to go back to the seller and get a extension. And I don't think when we did our due diligence, the lender was on site. He didn't see any reservations initially from him.
Yeah.
I did talk to the bank after we closed, and it was a little bit new for the department of the bank we worked with in that region, but they felt comfortable with it. So
one of the things that doesn't happen too often, but the same bank, and what Steve's talking about, there's 2 doors to the bank. One door is kind of a CRA door, Community Reinvestment Act door, which means the bank really likes the property, likes the area that the property is. They like the affordability of the property. They want to improve the property. And at the last, couple weeks into the deal, they wanted to exchange that side of the bank with another side of the bank. Again, same bank, but instead of wanting to go for a recourse transaction, the other side of the bank said we can do it as a non-recourse transaction after the property is stabilized. So Steve brought the transaction, we brought the transaction in. We did it as a recourse loan during the period of time that the property was being rehabbed, and during the stabilization and after it's stabilized, it will modify to a non-recourse loan. So one of the things that, they still did the transaction, but we had to bring it from, say, 25% down to 30% down to get that type of a non-recourse transaction. Those things happen. We were able to get the deal done. We love the terms of the loan, the non-recourse piece. The amortization worked out well. The interest only worked out well. Everything worked out well. But sometimes one group inside the large bank may not like it, another group loves it. So you just never know what is trash and what is treasure within the bank itself. And so the bank funded the transaction, and we got the deal done. So tell me a little bit about your partnership. How many KPs or key principals do you have?
Well, including myself, there's 4.
So there's 4 guys that are in the cockpit.
Right.
Steve's the captain, and you got 3 other first officers. And then how many limited partners that are passengers in the bank?
Around 16.
Okay. And then you guys did a PPM.
Right.
And what is a PPM?
It's a private placement memorandum.
Mm-hmm. And why do you do something like that?
Well, it's an opportunity for people that don't have enough money to get involved in real estate to join an investment group and own, a part of an apartment. And it's an avenue. It is obviously there's an operating agreement that goes with this. The way it's done is you form an LLC, an operating agreement goes with it, and the PPM explains all this, and it kind of lets people buy a part of this asset without having to buy the whole thing. They can own a piece of it.
Right. It's really just a big disclosure statement. And the disclosure statement says, it gives the limited partners a vision. This is what we want to buy. This is how we're going to operate the property. This is what our expected rates of return are going to be. These are the risks. I mean, there are risks involved when you buy anything, especially real estate. So all that is disclosed in the private placement memorandum. And Steve wants to be SEC, the Security Exchange Commission compliant. So he built a PPM by an attorney, a securities attorney. So that there's a cost that's involved with that. But Steve and his group wanted to do the things right. And so that's what he did. And in 99.9% of the transactions that we handle, that whether there's a PPM, the borrower is doing it correctly. So we like that. So from the period of time that you found the property to the time that it took to close, how long was that? How many weeks, months, years? How long did it take?
When I first walked the property in April, we closed in October. So was that about 6 months?
Okay. But during the period of time, you were negotiating the contract a little bit. You were putting together vendors, get the loan closed, and now you're on the property. What happened to occupancy as soon as you took over the property?
Well, I learned a couple things.
What did you learn?
First thing I learned was November and December are very stagnant months in real estate. And people don't move a lot. People spend money on gifts, spend money on family. And it's a quiet period, essentially, in apartment business. Mm-hmm. And of course, working very closely with a property management company. When we took over, we basically said, let's just kind of hold the course. Okay. We're going to just kind of leave things the same for a couple months, get our hands around this property, focus really hard on the rehab we're doing because we can do a lot of rehab in those months.
Sure.
And then when it comes to the first of the year, people are more active. Then we were going to start working a little bit more on some of the financial issues, and some of the problems we're trying to fix on the financial statement of the operating statement of the property.
Right. How much CapEx are you going to put into the property yourself?
Well, we've got about $600,000 budgeted.
Okay.
A chunk of that's roofs. So.
Oh, really?
Yeah.
Are you replacing the roof? Are you patching the roof? What are you doing?
Well, we budgeted another layer.
Okay.
So it's not a tear off, but another layer is pre-budgeted. So that's a good chunk of that. But we're looking at other ways we can continue to bring in amenities. And one thing that was really different with this property was there were pretty much no amenities. And
the pool was crushed.
It was gone about 10 years ago.
Okay.
Now, the good thing about that is the pool house is now the office.
Okay.
So we have a 2,000 square foot office, which gives us a lot of probabilities and a lot of possibilities.
Sure.
New rooms, and we have a Wi-Fi cafe. We're able to change. This is new things we're adding to the property. We brought in a playground, and
how'd that go over?
It's full. Anytime school's out, there's 20, 30, 40 kids on the playground. Wow. I mean, it's a dominantly 2-bedroom property, 2 and 3 bedroom. So it's family oriented, and we're bringing in amenities that make family life a little easier. I mean, it's like you say, mom's over there cooking dinner, yelling at the kids to come eat dinner, and the kids are on the playground going, "Oh, I'll be there in a couple minutes." You guys have all seen that. I've seen
right.
That.
Sure.
And so it's an interesting, we're trying to increase the vibrancy of the community and bringing in these amenities to make family life better for the people that live there.
How long do you think it's going to take to get all this rehab done?
We're probably a month or two away from finalizing that.
Oh, no kidding.
Yeah.
So you guys have really been putting your nose to the grindstone to get all this stuff done.
Yep. We're trying to get the rehab done and then just focus on operations is really, trying to get the whatever work we're doing is get it finished up.
We talked a little bit about the amenities to the property. How about the tenants? So the tenants happy with the new ownership structure and kind of understanding that there's a new sheriff in town and you got to pay your payments on time and there's no negotiations of rents type of stuff, no secret type of stuff?
A lot of people are really, really surprised. We've had some people come on the property that had lived there a number of years ago, and they're completely shocked by the changes that have occurred.
Wow.
And there's a few people who, kind of like paying their rent on the 25th of the month, and they're not enjoying some of these changes.
Sure.
But, we're transitioning. We're working with people, give people an opportunity. It's pretty clear where we're going. And from where I'm coming from, my perspective is we're coming in, we're upgrading the facilities, we're upgrading the units, we're bringing in new amenities. So it's kind of a two-handed approach to it.
Yeah. So when I drove the property first time back during the summer to what I looked at it back about a month ago or so, completely changed. Beautiful property. Steve and his crew have done a great job of kind of putting the property back together again, showing some direction. Having 10 people as employees on a 164-unit building is never a good way. That just tells me the expenses were just overloaded into the property itself, and there was lack of direct observation of how a property is to be run. So there was not a captain of that ship prior to Steve taking the deal over. So I'm very happy. I'm sure the tenants are going to be much happier having a professional management company manage the property. And having a beautiful office that they're redoing, and it's in a great location. What's the new name of the property now?
We renamed it. It's Adira Apartments.
And why did you rename it? Is it because a lot of people don't rename it, but why did you rename it?
Well, a lot of people suggested that we needed to change the name. They were asking me kind of what the name was, and we wanted to change the tone of the neighborhood.
That's exactly correct.
And we wanted to bring in some new signage, some new colors, kind of change the whole street appeal. It's on a very busy street next to a high school in South Dallas.
Yeah.
And we thought it was a good opportunity to improve the local look and the look light on the road.
Yeah, Steve, you and your crew have done a fantastic job of kind of putting the property back together. Here's an interesting question. Would you do it again?
Yeah, we'd do it again. I'd do it different, but we'd do it again.
So are you out looking at more properties? I mean, this property is just about to be stabilized right now. Are you out looking at another opportunity that's out there?
Yep. Yeah.
That's great. Well, we've kind of slowed the process down. You've kind of learned how long it took Steve to get under contract in this deal, talked a little bit about the challenges on the lending side, talked a little bit about, what's going on with the improvement to the property. So is there with all this work, was there any funny stories, anything you can think of in the challenges in this?
Well, there's always stuff people do to these properties.
Yeah.
I guess one of the biggest surprises we had was after the first big rain, which happened about a week after we bought the property. We found out the roofs were not in as good a shape as we thought, and walked into the office, and there's a nice big drip coming right through the middle of the ceiling on the floor. So it's like, well, the stuff happens,
Yeah.
And so it's like, I guess need to move the roofs up to a little bit higher priority to get that taken care of. So
yeah. Well, Steve has definitely got his stripes on his captain's chair of the airplane. And if you want to get a hold of Steve and kind of talk through maybe another transaction with Steve, can you throw out your email address, Steve?
Sure. It's s.sentosapm@gmail.com.
I'm going to have you spell that out if you could.
s.sentosapm@gmail.com.
It's fantastic. Steve, thanks for hanging out with us in the podcast. We appreciate your business. We appreciate your time. Thanks.
Thank you.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.